Parekh sir, present chairman of WIRC, fellow chartered accountants and my dear friends. Very good morning to everybody. Good morning. The extreme volatility right now in the market is basically because of the ongoing Iran-Israel-US war. It started on 28th of February. Since then till now, the overall cumulative index has corrected almost 11 to 12%. Talking about 612, if I am not mistaken. Rupee has reached 94 for the first time. Till now, it has never reached 94. And over that, only in March, the FIS selling was 1,23,000 crores only of March. January, if we take 22,000 crores, then it is coming somewhere around 5 overall. But only for March, this is the position. So, keeping all these things in mind, definitely we feel things are very great, and in this situation, it's better to stay away from the market. That's a normal psychology. Because whenever the things are going low, definitely we feel that we should not get into it. But this is where the basic mistake happens. If I quote Warren Buffett, God of investing, you be greedy when everybody is fearful. And you be fearful when everybody is greedy. Another thing I would like to say, Sanjay did mention our study circle days, and then we were quite active. In words of Warren Buffett only, he said Berkshire Hathaway was the biggest mistake of his life. This he has quoted in his book. After that, this is the AGM meetings. There is a compilation of AGM meetings. There it has been mentioned. But then Charlie Munger has mentioned after that, it was a mistake. But Warren Buffett had the capacity to turn the lemon into lemonade. And today it is the most prized company of the world. So what Sanjay had referred, this situation, we feel that many crashes have happened. It's better to take the loss and get out of the market. But this provides the opportunity to build wealth. Now, apart from this, I would like to mention the situation right now is definitely not desirable. Of course, we need to acknowledge the war is going on, people are losing their lives. Any war, any time, there is a lot of human suffering. So that we need to acknowledge, and we should pray also that we should come to an end. But that is not something in our hand. But definitely it is not a desirable situation. At present, if we see, the situation is very dynamic. Dynamic because yesterday the Honorable President of the United States mentioned another 10 days ceasefire will go ahead. First 48 hours, then 5 days, now another 10 days. And Iran is stubborn. State of Hormuz will not be over. State of Hormuz, they made it very clear at that time only that we are not going to open. So he is going on extending. Now, over that, police have mentioned, please I have to check, Monday, straight. That also they are threatening to close. Now, that also is another major choke point, where approximately 10 to 12% of world maritime trade happens and 8 to 9 billion barrels of oil passes through it. So suppose both gets choked, then what will happen? We may say in India, we are not directly affected. That's not so. Whatever are the international factors, especially crude. Once the crude is going up, definitely our certain industries like paints, textiles, they are directly affected. So it is definitely, and our rupee depreciates, imports gets costlier, exports may get a benefit, but imports are getting costlier. So it is not to anybody's benefit, we are also affected because of it. So having said all this, keeping the war situation in mind, which is still ongoing, we really don't know when it is going to get over, because in spite of the timeline, whatever has been given, there is no improvement in the situation. And so we really don't know when the war is going to come to an end. So keeping this in mind, this is the, of course, keeping in mind people losing their lives, everything, but still it's the best time to invest in the market. Why? See, you may be having a list of companies. You may feel that this was very high price, it's out of my capacity. After this, how much I will get? Maybe it is near 52 week high, or maybe 10-20% near to 50 week high, 52 week high. So there is no point in thinking, but right now the valuations are very attractive. And second most important thing, the fundamentals of the company are not affected. Especially the large cap companies. If you see the large cap, the P is around 20.4 to 20.7. It is in that range right now. And 5 years average is 21.5 and 10 years average is 20.3. So it is running at 10 years average. So as simple-minded, if we keep an approach that we make a portfolio in large cap scripts, then definitely we make very good money. Now I would like to run through the slides, what has been laid out, just to give an idea and to give a confidence also that the crashes are always followed by the comeback, and the comeback has always been more resilient. See, go to the next. This is the big picture. In 2001, the Sensex was 850, Nifty. All-time high is 26,373. March 26, it is 22,700. This is the progress for the last 26 years. This is with all the crashes and all the comebacks. Yes. Yeah. Now, what I would like to highlight, 2001-2, when .com burst and Ketan Tariq scam had happened, the recovery time was 46 months. What I would like you to observe is the recovery period. Here it was 46 months. Next. Global financial crisis of 2008. Nifty had corrected minus 65%, recovery took 71 months, more than 5 years, almost 6 years. Next. China shock, demonetization, GST uncertainty, 15-16. It took 24 months. Next. COVID, it took 10 months. Inflation shock of 2022 and US rate high, it took 13 months. This is right now ongoing. Now, what I would like to stress upon here, March 26, the Nifty is 22,700. And in COVID, it was 7,500. Still we are 3x above it, as on today. So basically, if you observe, the recovery period has always going down from 72 months, 71 months, it has gone up to 10 months. So this time also, the recovery will be faster for two reasons. One is, our fundamentals have not changed. Our fundamentals are good. We had a 17-18 months of a bad cycle. After that, this is the right time when the market will go up, most likely. here if you see from 1 to up to March 23, these are 18 month cycle after which the bull run is always followed. And if you see from October October 1 to October 3, 81% and 248% is the return. This is the maximum. So September 24 to February 26. September 24 to February 26. Again, this is a 18 months period. So basically, this cycle has always followed. And more important, the market has never gone beyond the 7 years rule. Every 7 years, the market has corrected. And every 7 years, you have got an opportunity of getting in the market for any reason. It may be COVID, it may be the Great Depression, it may be the global crisis, anything. So, because of this, if you see as per the figures, Nifty 50 has remained stagnant for a prolonged period. 2.45% is the negative return. This is in the smaller chart name, दूसरा chart. Here if you see Nifty 100 is corrected by 43%, mid cap is 37%, small cap is 40%, BSE 500 is 38%. This is bringing the whole market near to long-term averages. And this is a very good entry point for future returns. As per what the historical data, whenever this type of correction has happened, there has always been a bull run for 12 to 36 months. And if the past is any indicator of the future, we can expect if we invest now with a strong heart, we can expect at least 30% in a year. Of course, after the war gets over. And 70 to 76% in 3 years. This is the historical data is also proving it. So basically, if this is the right time to put the money in a staggered manner, because still the war is not over, our Sensex is around 22,000. Now they are telling it may come up to 19,000. You put maybe if you want to put 100 rupees, right now you can put in 25 rupees and stagger the 25 in next 3 phases. So this is basically what is the scenario. Now apart from this, there are golden principles of stock selection. I will not be going into it. We have that presentation. Just to select the stocks what we should get. But I have made it clear that we should basically go for large cap stocks because they are properly corrected and it is near to its 10 years average. Now what we have structured this program in such a way, now I make that part also clear. Narinder Bhai have kept a set of questions which I think keeping in mind the chartered accounts and keeping in mind what the public will be asking. I have made a set of questions which Narinder Bhai will be answering. So we will deliberate on it and then it will be open for the public also to ask the questions to him as well as me. Now, I think I will stop here right now and we will take it forward. Thank you so much.